And one of the reasons we're down is we lost our buyer. That's where we lost the buyer. The next buyer is going to just be the continued trickle of wealth, right? If you look at JP Morgan or Bank of America, or any of these big wealth platforms, right, that have the RIAs, remember, we have about $45 trillion of wealth managed from the baby boomers. It's managed by stockbrokers in the old days, we call them, right? Now they're called registered investment advisors. If they move to 3% allocation to crypto, that's $1.2 trillion. 5% allocation is $2 trillion. Like the whole market cap of Bitcoin is what? 1.7 trillion? As wealth starts to allocate, it dwarfs everything else. And that's just starting.
Markets don't usually confuse investors when they're euphoric. They confuse them when the fundamentals look bullish, but prices refuse to cooperate. And that's exactly where we find ourselves right now. Liquidity is tight, narratives feel fractured, and despite massive structural progress in crypto, price action has left many investors questioning whether this cycle is broken or simply early. That tension is at the heart of this conversation with Mike Novogratz, billionaire investor and founder of Galaxy. Novogratz sits at the intersection of crypto and traditional finance, regularly advising hedge funds, institutions, and global allocators who are only now beginning to understand what digital assets represent. And his message is both sobering and quietly bullish. Prices aren't disappointing because crypto failed. They're lagging because the biggest buyers haven't fully arrived yet. If you've been asking yourself why Bitcoin hasn't behaved the way prior bull markets trained us to expect, Novogratz offers a framework that actually makes sense. He points away from short-term hype and toward long-term capital flows. Specifically, the tens of trillions of dollars still being managed on behalf of baby boomers inside traditional wealth platforms. According to his thesis, even small allocation shifts from that pool could overwhelm the entire crypto market over time. The catch? That process is slow, deliberate, and highly sensitive to liquidity conditions. Now, I know what some of you might be thinking. We've heard this institutional story before. And that's fair. But what makes this discussion different is that Novogratz isn't just forecasting upside. He's explaining the friction, why the buyer disappeared, why momentum stalled, and why confusion at this stage of the cycle is not only normal, but expected. So in this video, we're going to break down how Novogratz is reading the market, what he believes needs to change before prices respond, and why patience, not blind optimism, may be the most underrated strategy right now. If that sounds useful, make sure you like the video, subscribe to the channel, and watch this all the way through, because the insights ahead are far more nuanced than a simple bullish or bearish take. Thanks for tuning in and enjoy the video.
How are you reading the market right now, and what are you looking forward to in the new year?
I had a sign in my hedge fund, charts don't lie, people do, right? The charts don't lie. So you always have to look at what the chart tells you. And when you look at the Bitcoin chart, we spent a lot of time above 100,000. 100,000 was a psychological big issue, right? We got to 100. We all felt like we accomplished something. I mean, I even put out a tweet or a post where I congratulated the community. I congratulated Galaxy, like this big accomplishment. There was a tremendous amount bought above 100, right? And we came and held it a few times. When you finally broke below 100, if you look at the chart, you can draw it. There's this very nice horizontal line. That's when we accelerated. We went from 100 down to 85 or 82,000, whatever the low was, real quick amount of time. That's people stopping out. That's people putting short positions on. So now that 100 becomes resistance. Normally, you don't go right through that 100 the first time up. You might trade up there and roll over again. And there's a lot of trapped longs, right? People that bought above 100 that at one point just want to get out of this thing. And so, it corresponds with the 4-year cycle that you hear so many people talk about. 4-year cycle ended just recently. There's a self-fulfilling idea that from a lot of crypto OGs that, come back in 9 months, 10 months, and it's time to buy it again. And so I don't know if we're going to go back through 100 in the next 6 weeks or 6 months. My view is we do, because we're going to get a dovish Fed share. They're going to cut rates down to 2.5%. We're going to get good legislation passed in the United States, I think. And having just got back from a week in the Mideast, I'm more convicted now that the future of blockchains and digital assets, real world assets on blockchains, is as bullish as it's ever been. That doesn't mean the price of you name the token is going to go up in the next 6 months, right? Being bullish on building out the infrastructure of neobanks and distributing Galaxy stock or Tesla stock or Google stock into places all around the world, that's going to happen. That's an 18-month to 3-year build-out process. And so we're kind of stuck in between this new bullishness that the industry finally arrived, and we still have all these tokens that need energy, right? Because most of the tokens that exist today are tokens that represent something, right? They're community tokens. They're not equity-like tokens. Hyperliquid being an exception to that, right? Where you can easily look at the math of how much Hyperliquid does. And so they're tokens that need storytellers. They're tokens that need new liquidity. It's just going to take time to rebuild that, right? The flash crash was terrible for this industry because it took out 20 to 30% of the market makers. And since that flash crash, I don't care if you talk to the guys at Binance or Bybit or Kraken or us in the institutional, volumes are down 30 odd percent. That means liquidity is down 30%. And every time we've done that in the past, it just takes a while to rebuild. How does that get rebuilt? Well, in retail, people get paychecks, they sell other assets, they slowly start gambling again. And institutions like to buy on momentum. I think we have kind of sideways and less than thrilling markets for a while, and you got to watch where it bottoms, and then we'll have another run up.
So my question to you is, like, this distribution from the OGs cashing out, how much longer do you think this can go on for?
God, I hope not much longer. Listen, I wish I knew. I think from what we saw, the bulk of it got done. A lot of it's come from China, and we don't see as much of that. We sometimes see it indirectly. What's interesting with the Chinese whales, they often are trading and they'll buy back somewhere, right? Whereas the whale that we executed, I would be very surprised if that money ever comes back into the system. That was a one-off. Someone got lucky and bought a whole bunch a long time ago and decided to take profits and have a new life. I wish I could answer the question. I do feel a lot of it. People had plenty of time if you were going to get out. And if you've held it back to here, I was actually talking to a guy who's got a huge stack. And he's like, yeah, maybe I should have sold something at 120. I didn't, but I'm not going to sell it here on the next leg up, even if it's a 4-year cycle. That's when he'll sell something. And so as long as crypto doesn't fall below 70, like if Bitcoin got below 70, maybe people shit their pants and get nervous that, oh my God, I got it. But I don't think you see selling in the mid to low 80s from long-term holders. In the short run, I think if I was a big institution, I'm waiting for it to get back above 100 than buying at 87 unless it really goes lower. And so it's time. But you also, like, crypto is always sold. To sell something, I need a story. So the story's got to be, if it's Bitcoin, it's got to be about liquidity. And so let's wait to see the new Fed chair. Let's wait to see what he talks about where rates are going. Let's wait to see what the US Fed does with, you could make a story where they make Fannie and Freddie risk-free assets. Well, that would add trillions of dollars or hundreds of billions of dollars to, liquidity in the banks. One thing, Trump and Besson and whoever he picks to run the Fed, once markets higher, they want the US to continue to be able to fund its deficit. They're going to print money. When that story picks up again is probably when you see the next leg. And then the momentum, like on a chart now, it would be, get us back through 100. I thought wrongly that in the next 2 weeks, we were going to grind up to 97, 98, 99 and kind of stall there, maybe even 102. Now the chart tells you, doesn't look so good. We could stay here, we could bounce, but you really got to get above 95 level to even have a shot at getting up to 100, 102. If you're a trader and you sold it, your stop loss is 95. We've learned in crypto, one giant buyer can change things quickly. And the markets are not that liquid right now. Someone came in and wanted to buy $2 billion, we'd be above 90 in, about 15 seconds. And one of the reasons we're down is we lost our buyer. That's where we lost the buyer. The next buyer is going to just be the continued trickle of wealth, right? If you look at JP Morgan or Bank of America or any of these big wealth platforms, right, that have the RIAs. Remember, we have about $45 trillion of wealth managed from the baby boomers. It's managed by stockbrokers in the old days, we call them, right? Now they're called registered investment advisors. If they move to 3% allocation to crypto, that's $1.2 trillion. 5% allocation is $2 trillion. Like the whole market cap of Bitcoin is what? 1.7 trillion? As wealth starts to allocate, it dwarfs everything else. And that's just starting.
One of the most important ideas to take from Novogratz's market outlook is that structure matters more than sentiment. Psychological levels, trapped positioning, and thin liquidity can distort price discovery for far longer than most investors expect. This isn't unique to crypto. We've seen similar dynamics in equities and commodities during macro transitions. But crypto amplifies them because markets are still relatively shallow. Novogratz's emphasis on charts and positioning echoes what other macro-focused investors like Paul Tudor Jones and Raoul Pal have argued. Price doesn't move when everyone expects it to move. It moves when conditions force it to. What's also notable is his caution around timing. Rather than predicting an immediate breakout, he frames the current phase as a reset, one where excess leverage, speculative froth, and weak hands are slowly being cleared. That perspective reframes sideways price action not as failure, but as preparation, and it sets the stage for the next part of the discussion, where Novogratz shifts from price mechanics to something even more powerful: narrative, regulation, because once regulation, distribution, and storytelling align, crypto stops being a niche trade and starts behaving like a global financial product. And that's where Wall Street enters the picture.
Once the market structure bill passes, it makes Wall Street even more crypto friendly. Wall Street is a selling machine. It was set up, I live down here. It was set up and built to sell stuff.
Yeah,
right?
exactly.
We're raising capital by selling it to people. It's the greatest selling machine the planet ever created. Now you're going to put Bitcoin and other digital assets through that selling machine. I usually bet on Wall Street. So Michael's very, very smart. He believes everything he says. It was a very thoughtful idea that they came up with, sanctioned by the board, to say, hey, let's put at least enough cash in a reserve to take off the run on the bank for the next couple of years. And I think that calmed things down. Can he get the stock trading at a premium again? We'll see. I think it's trading about 95 cents on the dollar right now. And when it trades below par, below NAV, for a while, it drifts into the category of just another closed-end fund. Doesn't do anything bad for the system, right? We have closed-end funds in every product in the financial services. It just becomes less exciting. Why it's important for Bitcoin is he was the number one salesman for Bitcoin, right? He was the community salesman. He was the face of the story. He's very articulate. He's very animated and excited about it. And so if his platform becomes dull, right? Strategy trades at a 15% discount permanently. There's just less energy of bringing people into the tent. In some ways, it's always time to find the new salesman. I was willing to retire a few years ago because I was laughing. I said, I've told the story of Bitcoin so many times, people are sick of hearing from me. You got to have a new generation of people that are bringing people into the tent. Larry Fink did the best job of it, right? Because his platform was the biggest. The community needs to constantly refresh itself. The story doesn't change, right? And keeping the story is simple, but new generations, new avenues of bringing people into Bitcoin. In some ways, it is a game of building trust with your fellow citizens, your fellow people in your community, right? It's the value of Bitcoin comes from the social construct that me and you both agree it has value. If you're Crash, you could call it a multi-level marketing machine. I sell it, you sell it. If everyone stops selling Bitcoin, let me tell you what the price happens. It goes down. All of these ecosystems need energy. What's been fascinating is how many of them have been able to keep energy. What is energy? Energy is how do I bring eyeballs to the story? So you need, Bitcoin would not have existed without Twitter, right?
Really?
Bitcoin would not have existed without Twitter. Twitter gave it a platform to tell its story. This is a storytelling asset.
That's so true.
I mean, about guys like Brock Pierce, where he was walking around handing people Bitcoin, telling the story. You think about all the OG storytellers. They all deserve a pat on the back for the work they did of, pushing the ball forward. Dan Morehead probably did more institutional talks on Bitcoin than any man that ever walked the planet, But it was, there are hundreds of them and thousands of them, quite frankly. And then someone in every small village was telling that story. That's what makes crypto valuable. It's the community. We're transitioning. Now utility is going to be much more important, not just in reality, but for the story. Because now that blockchains are fast enough to be used, the legislative framework's allowing them to be used. People are like, okay, what does it do? Show me how it works. And so it's going to be harder for blockchains that don't do a lot. And we have a lot of ghost chains with high valuation to keep their story alive, right? No story, no value.
I guess that argument that the original ideals of Bitcoin around its purpose as a nascent currency that's outside of the financial system is now basically being co-opted by it.
When I think of what Bitcoin has morphed into standing for is a hedge versus the unbelievably irresponsible fiscal and monetary policy that the West has engaged in. And that happens in every cycle. That happens. Every reserve currency blows it. They print too many dollars and you debase the dollar. It had energy of the system because of what happened in 08. The system's not fair. We want to have our own place to store our wealth. But it really still is a store of wealth. I'm trusting this community to store my wealth because I don't trust the Federal Reserve. I don't trust the U.S. government won't keep. Donald Trump's never liked a tax he wouldn't pay, right? He loved debt his whole career. And so why do we think now they're going to get responsible? And they're not, right? The deficit's bigger now than when they took over, or just as big. We're at $38 trillion of debt. We're going to be at $40 trillion of debt. And so that's really the story of Bitcoin. And I don't know if it matters if you keep it, on your Trezor, in your safe in your garage, or if you keep it custodied at Fidelity. You're buying it for that same reason, really, because you think the dollar is going to be worth less. I was looking this morning in here. Where's my gold? I got a drawer full of gold coins, and I was like, shit, I gotta get a safe because when I bought them, they were all worth like $1,200 and now they're worth $4,000 or $4,300. And I got 50 coins in there. And I was like, it was the same reason. And we were digital gold. And I think getting away from that story makes it complicated, and yes, it started, Satoshi thought it was going to be money. Well, money you can confuse as store of value or a payment system. I don't think it was ever meant to buy your Coca-Cola.
What Novogratz ultimately underscores is that markets don't run on ideology alone. They run on trust, distribution, and energy. Bitcoin's early growth was fueled by grassroots storytelling, online communities, and conviction-driven adoption. But as the asset matures, the drivers of demand evolve. The question is no longer, does Bitcoin work? It's how does it scale into the existing financial system without losing its core value proposition? This is where regulation and institutional infrastructure become double-edged swords. On one hand, they unlock access to massive pools of capital and normalize crypto as a legitimate asset class. On the other, they risk dulling the narrative that originally made Bitcoin compelling. Novogratz doesn't shy away from that tension. Instead, he reframes it. Every financial asset relies on belief, and belief must be continuously renewed. In that sense, crypto is not unique. It's just more honest about how much storytelling matters. His broader macro argument is equally important. Bitcoin's relevance isn't rooted in rebellion anymore. It's rooted in realism. Ballooning deficits, persistent monetary expansion, and declining trust in fiscal discipline all reinforce the case for scarce, non-sovereign assets. Whether Bitcoin sits in cold storage or inside an ETF wrapper, becomes secondary to why people own it in the first place, as protection against long-term currency debasement. And that's why Novogratz's outlook resonates with serious investors. He's not selling euphoria. He's describing a slow, uneven transition where infrastructure, liquidity, and credibility are being built in real time. Some projects won't survive that transition. Some narratives will fade. But the assets that deliver real utility and can sustain belief will define the next phase of this market. So if you're frustrated, confused, or questioning whether this cycle is different, this conversation offers clarity without sugarcoating reality. Let me know what you think in the comments. Do you agree with Novogratz's view on liquidity and institutional timing? Or do you think the market is missing something bigger? If you found value in this breakdown, hit the like button, subscribe for more in-depth crypto analysis, and share this video with someone who's been wondering why prices don't match the headlines. Thanks for watching, and I'll see you in the next one.